Good morning. Thank you for watching Taxes Made Easy, either live or on rebroadcast. Hope you had a great weekend. And I've got a lot of great information again to show. We're going to wrap up the income portion of the analysis today, and there's a lot of great news out there as well. So, there's all kinds of different ways that people can receive income, and a lot of people question what is actually counted, what isn't counted, and what other sources have to be included. So we're going to flesh that out today and wrap up the income section. We talked about W-2, we talked about payroll liabilities, and we're going to make sure we don't miss anything else because the IRS looks at everything, almost all sources of income when it comes to household income. So stay tuned. We'll be right back after this next break and have a lot of information to cover for you. Welcome back, everybody. And again, thank you for watching Taxes Made Easy. So we've got a lot to cover, and we're just going to jump right into it. And hope everybody had a nice, relaxing weekend. But we're going to cover some pretty interesting topics today. The first one will be, let me make sure we get this right. It's not coming up. Where is that? I'm going to cheat a little bit here. Chrysler, so this is from the Epic Times. This is a pretty big recall. 1.46 million vehicles worldwide by Stellantis, who owns Chrysler Dodge. And this is due to brake issues. So if you own a Chrysler, 1.46 million vehicles worldwide are being recalled due to a software malfunction in the anti-lock brake system. So the brakes still function, just not as well. And if your anti-lock brake system isn't working, that can definitely be a serious danger. So most of these are Ram 1500 trucks from 2019 and 21 to 24 models, as well as 159,000 vehicles in Canada, Mexico, North America. This issue also carry over to Jeep Gladiator models and Jeep Wrangler vehicles from 2018 to 24 and 2020 to 2024. So this issue is a little bit different, a short circuit issue in the instrument panel for the Jeeps. But if you own a Dodge Ram 1500, you might want to look into this because again, this is a pretty large recall to get this issue fixed. So get your vehicle in there, get it fixed for your own safety. Moving forward, this is a pretty big issue here with the withdrawal from Afghanistan. And this is a townhall.com article. And I think it's pretty fair on the balance here. It's just pretty informative overall. So you have, this has been a long wait for this. I think this report will be ignored by most of the media, and the other half of the media will try to claim it's the end of the world. It's happened. Was our withdrawal catastrophic? Yeah. Was it unorderly, disorderly? Yes. Was it well planned? No. But I personally think they could have done a lot better. I think they chose optics and not hurting anybody when the Taliban was in the process of hurting and killing people. I think we left a but a withdrawal, an orderly withdrawal when leaving the country is a huge issue here. Should we have been at war with the Taliban for the last 20 years? That's a whole nother issue. I don't know if I have the answer for that. So President Trump set the timeline. He did start negotiations with the Taliban, rightly or wrongly. I don't think the Biden administration, it wasn't an easy situation to step into, but on their end, did they handle it well? I don't think they did at all. Again, the key thing here is that it was very disorganized. They didn't, we don't think we ever thought, nobody ever talked about, well, what's going to happen when the Taliban comes over the wall. Why not? Why didn't they plan for it? Again, it's a 350-page document. It is important to have good information. I think, again, we're going to hear a lot more from this over the next, couple weeks. But again, I think it was a failure of American intelligence. Again, it was a bad position to start with, but at the same time, at least, and I do have to thank the Trump administration and Biden administration for getting us out of that war. What's come in its place is horrific, but I don't think we could have ever won in Afghanistan with Pakistan and other allies and Iran actively funding and supporting the Taliban. Again, the world had circled Afghanistan, and we were tolerating way too much from our allies in Iran. The moment we pulled out, this was bound to happen. But I do think we need to get out of forever wars instead of going and trying to nation build. We're stuck in another quagmire in Iraq, which again, we're not losing troops as much as we were against Afghanistan. But I am in favor of bringing our troops home, getting involved where it really suits our interests, but going in, taking care of the issue and stepping out, not being in some place for 20, 30 years. We shouldn't be all over the country where we go in and nation build and stay there forever. So another issue here, and I'm going to share this tab. We talk about identity theft a lot. This is a huge issue out there. People need to be very aware that whenever you work with different companies, they have your information, you're sharing your information, you need to rent cars, to do other things. And hackers know this, which is why they're targeting different car rental service that would have your address, they would have your credit card number, they would have a lot of this. So again, they breach their systems, and again, we're not sure how many people were affected nationwide, or that they didn't reveal how many people have been affected nationwide. If you have done anything with Avis in the last, 5 to 10 years, and it looks like it was mainly in South Carolina, but be careful. We don't know the extent of this. Protect yourself. If you do not have a PIN with the IRS, if you do not have ways to protect yourself, it is becoming a much bigger and bigger problem. So, again, Avis is offering free credit monitoring services from Equifax for a year, and again, so if you have used Avis, I would take advantage of this. You have to sign up by December 31st to get the protection offered through this. But again, it's a growing problem. So 50% of all cyber attacks have a higher massive impact, and this is the number I was looking for. 95% of the attacks were found to have been executed remotely. So not at the location, not directly through someone's computer, but these are all done, and a lot of them are done overseas. So again, it's really damaging. And one of the big concerns is that you go to EVs can be even more vulnerable to cyber attacks. So again, we have plenty of enemies out there. They're planning this. They're planning attacking not only EVs, but also charging stations and disabling them. So again, protect yourself. Have your identity protected. Make sure you're monitoring it. because there are plenty of thieves out there. So another article, this is from a local NBC station, but again, Austin, Texas. Seven people, 6 of them from Texas, have been sentenced for stealing identities and getting their tax refunds. They did it to the tune of $30 million. So, the fraud of the IRS to 30 million, but the DOJ announced the leader of the scheme tried to steal $110 million, was sentenced to more than 14 years in prison. Co-defendants were also sentenced. The lead was an Abraham Yusuf, and there's quite a few other people that were arrested in order to pay restitution. The way they did this, and this is interesting that it has changed, the policies of the IRS has changed in working with tax professionals, for better or worse. And just reading through this is that they would get the addresses, they would get the basic information of the taxpayers and call in as their representatives, a power of attorney, and change the addresses even though they never had a valid power of attorney. So, they would act as legitimate representatives according to the DOJ. So right now, to get on file as a power of attorney, you have to have you have to sign a power of attorney, you have to submit it, and even then, this is why it can be very important to have your own account with the IRS, to have a PIN number for each tax case or for your tax account with the IRS. That way, if they don't have the PIN number, they can't get in, they can't file a return, they're locked out. So it's very handy to get one of those. I talked to a CPA the other day, and they deal with more high-end clients. They said that's the first thing they tell everybody: get on irs.gov with their tax account and get a PIN. Best way to protect yourself from massive issues for many years. So again, if you have any questions about that, give us a call. We can direct you on how to do that. It's easier than you would think. Just don't lose it. Keep track of that, because it can make it harder to deal with the IRS, but it can also absolutely protect you. And for representatives calling for the IRS right now, they ask for their social security number, the date of birth, all kinds of personal information from representatives. And the reason they do that is to confirm exactly who's calling in and make it a lot easier to track someone if they are doing this fraudulently. So that was a message of the day: is protect yourself, protect your information. And we're going to continue on right after the break, as we are hitting one in just a couple seconds. So after scaring everybody with a few tax schemes, again, I'm just going to try to continue to hammer in on this. Make sure you're protecting yourself. A lot of the people stealing identities have no connection to their victims whatsoever. And again, a lot of these are being done en masse. They're organized. So do what you can to protect yourself. So this is an article talking about the migrant crisis, or the crisis at the border. Again, this is again talking about how the numbers are distorted from the government, and the language of it has been changing. But here you have 4,000 Venezuelan migrants taking over, trashing a Target parking lot. But the Wall Street Journal, this is from the Wall Street Journal, where they got the main number for the article, showing that more than 70% of migrants that came to the country under Joe Biden did so illegally. And this is not based on reality. So this is from the Wall Street Journal, but total migrants here are usually are estimated to be much, much higher than these numbers. So the number of illegal aliens coming, or people coming into the country illegally, could be much higher than the official numbers, and probably are much, much higher than the official numbers. They're showing their first year in office around 1 million, then jumping to almost 3 million, over 3 million. And so far in 2020, we already have more than 2 million come into the country. The vast majority of those coming in illegally, which is, you're not going to get lower housing letting millions and millions of people into the country. It's just you're going to have inflation. You're going to have more demand because you have more people here. And then it goes through how this is destroyed construction and gig work, landscaping. You can't have so much more labor without affecting wages and jobs. And what it talks about, to consistently looking at the job numbers, we've had really poor labor growth. But consistently, most of the new jobs have gone to not U.S. citizens, but other immigrants. So again, 70% of migrants come to the country coming in illegally is not healthy for any country. And it's not healthy for the people that are coming in illegally because they're not in the system. Whenever something bad happens, whenever they have an issue, they can't work within the system to get fixed. So even if it's like, hey, they want to come, they want to work hard, the vast majority of them do want to do exactly that. The problem is you're letting in the cartel members, the thugs, murderers, criminals, and there's almost no control on it. So we get situations like what is happening in Aurora, Colorado, where they're literally taking over parts of the city, patrolling it with rifles, with guns, and the governor is doing almost nothing. So again, we're going to see crazier situations like that coming up. So and popping up unless we control or enforce the laws of our country. So this next article, this is from Fox Business. So Goya Foods, he's spoken out before. And this is Bob Unanu. I'm sure I'm butchering that. But claiming that their war on fossil fuels from the Biden-Harris administration and global weakness is what's really hurting the economy. So again, as soon as Biden was elected, they canceled the Keystone Pipeline. They've gone after oil and gas consistently. And with the overspending, massive overspending, which to be fair, started with Trump. I have no problem throwing Trump under the bus for that. And so in his opinion, you had two very clear distinctions. Under Donald Trump, we had prosperity pre-COVID. Yes, that's where it was going. But then COVID destroyed most of that. And then we've had inflation and poverty. When you're looking back, especially the numbers for the last year, you had what looked like a boom. But again, it's just crazy inflation in 22, 23. We're still, the prices of everything is still much higher today than they were 4 years ago. And so it's hurt all kinds of people. It's hurt especially the poorest more than anybody else. So, Bob, I won't try to butcher his last name time and time again, is really arguing that one of the biggest issues here is fuel, but also the war in Russia. Fertilizer, which is affecting the cost of food, has increased 50%. With Russia and Ukraine supplying 50% of the world's fertilizer, that has tripled the cost of fertilizer. It hasn't gone up 50%, it's gone up 3 times, which affects farming, the price of food. Now, it was very possible Russia would have attacked Ukraine if Trump was still president. That could be debated. I mean, Putin might have done it anyway, or Putin might have been afraid of Trump. Who knows? But again, this is part of what's happening in the world. And when a lot of fertilizer comes from oil, and increasing the price of oil drives inflation throughout the entire economy. Energy is a huge factor in any economy. So again, it is most of that is fairly consistent, but the stuff that's been talked about. But he talks about the average Social Security check is $1,200. I don't know if it's that low, but they're arguing that the benefits for people coming in the country illegally is $4,000 a month. So we're giving more to people coming here illegally than the people that have lived and worked in this country their entire life. And the cost of living just is not keeping up with the true costs out there. So again, it's do we believe Bob? Make your own decision, look at the costs. But again, when you have major CEOs coming out and saying, hey, it has hurt people across the board. On the flip side, you just had Mark Cuban, who's the owner of the Dallas Mavericks, come out and give a full-throated defense of Kamala Harris and say that she's been great for businesses and corporations. That's his opinion. I don't agree with that. But, working with businesses day in and day out, I see a lot of people struggling. But some people, Mark Cuban, billionaire, seeing something else. Or that, that's his opinion and his perspective. So moving forward, I think this is this is red state, so it definitely comes from the right. But what I really want to focus on, what Bernie Sanders is actually saying. He did an interview, and it's always easy to get funny pictures of Bernie Sanders because his hair is always messy, and you can tell it's taken by the opposition when someone has their mouth open, with that look, and they do that to everybody. And they ask, so this is, on Sundays, Meet the Press, a very liberal leading show, and they ask him some questions. Do you think that Kamala Harris is abandoning her progressive ideals with her change in positions on many issues, coming more to the center? And so his main point is, I think she's trying to be pragmatic, and her campaign, and to do what she thinks is right in order to win the election. So that's the frustrating part here. As a voter, I don't want to hear what someone thinks they need to say in order to win the election. I want to hear what they're actually going to do. So this is someone each individual is going to have to decide if they trust what she's saying now, this is what she's saying now, or do we look at her previous policy positions where there are times that she was to the left of Bernie Sanders, and now that takes some doing. On most issues, Bernie Sanders is still to the left of Kamala Harris. One thing that came out recently is regarding the corporate tax rate. It's currently around 20%, which is fairly consistent across the world. Most of the average rate is, I think, is just under that. Europe is a little bit, I think it's either Europe or Japan is out there a little bit below it, some of our major competitors out there. But Trump wants to further cut it. Kamala wants to increase it to 20%, which is not as bad as what President Biden wanted to do, which is raise it to 40%. So what is she actually going to do? Again, this is someone claiming she's a flip-flopper. Again, it's a campaigning season, so you're going to hear too often. You're going to hear what we want to hear, not what actually needs to be done, and that ties directly into this next article from the Epic Times, and then actually goes after Trump and Harris here. So this has been in the news a lot. I haven't really talked about it yet, but this is a pretty good article talking about how do we save all these still jobs? How do we make sure that this is U.S. steel is still producing steel in the United States, creating steel? Japan has made an offer. Nippon Steel has offered to buy it for $14.1 billion, which would keep. They're promising to retain all American jobs at union wages, upgrade all facilities, and generally save the company. If this doesn't go through, will U.S. Steel collapse? Possibly. We don't know. It's struggling. It's absolutely struggling. American manufacturing has been struggling for quite some time. And this article really takes a deep dive into why. And the article criticizes both Trump and Harris about opposing this deal. Again, this is an opinion piece, but really saying that, look, we should allow foreign investment from friendly countries to come in and save major manufacturing industries like steel. In election season, neither Trump nor Kamala want to be seen as favoring foreign over American ownership, even if it makes economic sense. In that sense, this comes at the worst time, just before a presidential election. So again, we talked about giving lip service and saying the right things that people want to hear rather than what we should hear is typical politics 101. And the argument here is that both sides are doing it, Harris and Trump. So the article really dives into, after the last 40 years, from the 70s really, that manufacturing has been gutted. We've lost a lot of it. We've lost, so many different manufacturing industries, from appliances, shoes, to shipbuilding. Why? The article argues is that we have abandoned free trade policies, and we have allowed more and more regulations, more and more laws, minimum wage laws, union laws. It has slowly made it harder and harder to compete in manufacturing, where you're creating goods that didn't have to compete on a global scale. So they're arguing that's what's hurting American manufacturing more than anything else. Now, again, it talks about the trade balance. Most of this is coming from the import of actual goods. And it's just exploded and gotten worse. Got bad in the 2000s. And then has only increased in the last, since 2010. So, the market crash actually reduced it because we stopped buying as much, and then the trade imbalance has just increased to astronomical levels. So how do we fix that? How do we change that? I mean, unless we can make manufacturing competitive again, it's not going to work. And they're saying one of the things that's papered over it is this vast debt that Japan, who's the biggest buyer of debt right now, it's not China so much. China's been selling off U.S. debt. But Japan, out of all the other countries, is the biggest purchaser of U.S. debt. They're a huge ally. But again, their argument is that by running these massive deficits, it's only a matter of time till that crashes. And the only way to really do this is to go back to true free trade, not 100%. I mean, if you have to have some. Again, in the 70s, we were polluting like crazy and destroying our again, the Chicago River actually caught on fire. It was so polluted. There's huge problems out there that we don't want to go back to, but making it so American manufacturer can get us back on track and make us competitive again. So, real answer here: dramatic domestic reform, deregulation, getting rid of the labor mandates that make it so hard to compete, balancing the U.S. federal budget, and implementing a sound monetary system unlike what we currently have, where, again, half the country believes we can just print more and more money to solve all of our problems, which just leads to more inflation. So, again, this is an economist's dream here, that we would actually do all of this. Politically, we don't have the will to do this. And I don't think politicians are talking about most of this because, Trump has talked about deregulating things. But again, balancing U.S. federal budget is going to take a huge leap forward in the right direction. And it's going to take political will that currently doesn't exist in Congress. So good food for thought. And we're going to switch gears to our topic of the day, which is going back to income. So jumping to income, we've talked about a few different kinds of income. And let me pull this up. Actually, that's not going to work. We talked about W-2 income. So people working for a paycheck where they're withholding Social Security. We talked about 1099, gig work, temporary work, where you're working by projects. We also talked about, and that goes with the profit and loss. We shared a lot of samples and examples of that. If you have questions on how to do a profit and loss, talk to a bookkeeper, talk to a CPA. You can give us a call, and I'll connect you with someone that can help you with that, or we can give you the basics. And I try to simplify it as much as possible. The number one thing you need is a time frame. Number two thing, income, and then expenses. And what we're really going to talk to after the break is other forms of income that go on your tax return. Not on your tax return, but on your financial statement. So what is the IRS looking at when you owe them money? What sources of income do they look at? And they include a lot of sources of income that aren't taxed. So one of the big ones, child support alimony. So currently they're taxable by the payer, whoever's paying that gets to pay the taxes on that. Big change recently, unless you have a divorce decree predating, I forget the year. But in the last almost 8 years, it's been the payer pays the taxes on it and then has to pay the child support alimony. And that's just one of many different forms of income. So child support alimony, disability, even if it's not taxable, VA retirement, and VA disability. So VA disability doesn't even show up on your tax returns as income. It's not considered income. It's not taxable income. However, when they're looking at total household income, it's included. So be aware of that. So it's also VA disability, any kind of side jobs, rental income, oil subsidies. And we're going to kind of break these down after the break. But again, these are all things that need to be considered, all need to be included as income. And we're going to talk about this and hammer this out as we wrap up the financial analysis right after the break, and be able to review that with you and answer any questions you might have. Welcome back, everybody. As we kind of wrap this section up as far as income, I'm going to jump to the analysis that we use when it comes to income and just kind of help organize it. So it says wages, and this is just a test case. So there's no personal information here. But again, if you have W-2 wages, 1099 wages, Social Security, it's fully taxable, pensions, annuities, any other forms, alimony, child support you're receiving, other rent subsidies, oil oil credits. If you own any mineral rights, that's something we've seen quite often. And when it says other income, it means pretty much almost all sources of income. Now, one of the things to be aware of here, wages of spouse or other contributors to the household. So I had a situation where it was mother-daughter, and they shared the same bank account. They lived in the same home. They pretty much all of mother's income, they were both working, but all of mother's income went into the same account as the daughter, and she paid everything out of that. So when they looked at the income for the two individuals, are they going to look at that as one pot of income or two? They treat it as one and prorate it because they're sharing all of their expenses. So when people talk about, okay, I don't want my spouse included, I don't want my partner included, my boyfriend, it really depends on how you treat your household income. If you treat it like one pot, all the income goes into the one pot, they're going to ask for all of the spouse information. Now, if you're married filing joint, of course, it's all going to be included together. You both owe the tax debt together in most cases, and then they'll consider it. But if you don't owe the tax debt together, if you're married filing joint or married filing separate, if you're sharing household expenses, which is how they're going to treat most married couples, they're going to treat it as they're going to add up the income from both spouses. So primary, secondary, and then add it up. What if you're not married? If you're living with someone and you're both putting all the money into one pot, they're going to treat that as they're going to what they call a prorationing situation, where you're living together, you're sharing expenses. One person isn't paying rent and utilities. So one of the questions is, can you change how the IRS looks at it? Yes, you can. But the way to do it is make sure you have separate accounts and you have a defined amount that the person that's renting is paying every month. So you can split the utility bills because those vary. But if someone pays $500 a month for a room or so much for utilities, now it really depends. If someone has a separate room and they're more of a roommate situation, that makes a lot more sense. But if you're boyfriend, girlfriend, and you're staying in the same room, you essentially living together and all of your expenses are shared, it's going to be much harder to split that up. So if your checking accounts are merged, you're more likely a married couple. But the difference here, and this is what is very interesting to people, is that the income is going to be treated very differently if you're treated as a roommate situation. For example, if it's a roommate situation, I would just delete this other income, and the roommate would get credit for the amount paid, or if they were the one renting out a room, they would get rent for any rental income minus whatever expenses. So you could subtract this from the rent or whatever, you could zero it out or whatever, and then you get full credit for all of the expenses, for the monthly expenses. If for house is based on county and where you live. So just explain the difference. So if it's just you and you have someone, a friend that's renting a room for you, you're not sharing expenses, nothing like that. Your income goes into separate checking accounts and he just pays you for his share of the bills. That's one thing. When they do the financial analysis, they will only look at the income from the primary person, the person that owes the taxes. If we go back to the previous example, so let's say there's an additional $4,000 in income here. So a total of $8,000, they'll do what's called a prorationing. So let's say there's 3 people in the home. They're in California, Riverside County. And so you add all this up. These numbers are not maxed out. Let's go ahead and max out these numbers. And I'm setting some of them down because I love the IRS actually reduced a lot of these numbers in the last year, or in May, which is nuts. IRS thinks for some reason that inflation has decreased. So if you have 50-50 income with someone else for a household of 3, the person and you're sharing expenses, you're only going to get 50% of that allowable, which is $839 rounded up. So again, it makes it a lot harder for qualify because you go through all the different expenses. The IRS for housing and utilities, they don't care what the actual number is. They only are going to go off of their standard. 315 divided by 2, again, 1,508 rounded up. So you go through any shared number, shared expenses. If you have your own vehicle, here they'll only look at one vehicle. If you're paying the car payment, that's fine. If this is the total, what they'll do is they'll just, for vehicles, they'll usually just give you for what the one person is paying. But health insurance, if you're not paying it, you're not going to get credit for it. So a lot of times they have one person have all the benefits come out of their income and the other person is paying it. So let's say the wife's income is lower because all the benefits are coming out of her check. The IRS just looks at the gross numbers. They don't care who's paying what. If you're the taxpayer, you're not paying that money, you're not going to get credit for it. But here on, for 3 people at those ages, that 474 would be cut in half. See, the credits for most of these things would be cut in half. Makes it a lot more difficult to qualify for things. So that's why if you have additional household income, you have to be very careful on how it's treated and how your situation is set up. Now, within reason, you can change that. Excuse me. But you have to be very careful with primary, secondary, and how that shakes out. So, and how is that presented to the IRS? So let's say these are married filing joint. We're just going to look at one pot. Distributions, K1 distributions are included. So again, this is essentially net profit from a business, alimony, child support. One of the things that's on here, it's not on here, but it is something that they're including. If you can't afford to make your bills and you're getting regular help from a client, from a family member, that will count as income. If it's consistent help, I had a case where someone was getting $1,700 a month to pay their mortgage or their rent. So they were getting $1,700 a month from his sister. Sister apparently had the funds and had the ability to help him out, and so she was helping him out every single month. That counted as an extra $1,700 in income. And the IRS treated it as income. So I had to tell him, look, you've got to get rid of this. You've got to stop doing this, or they're just going to treat it as income. You're not going to qualify. He had to get rid of that, stop taking the money from his sister, and then he qualified for an offer and compromise, and we were able to help him out. But again, it's very different than what goes on your tax return. Another rule of thumb, household income really applies to husband and wife. If you have a grandparent in the home and you claim them as a dependent, so this is the third person in this household, we have 3 people over age 65. Going back to income. You typically, if the grandparent has Social Security, they have their own expenses. They like to go out, they like to live their life, etc. When you have a grandparent in the home and they're not putting that Social Security into your checking account for the monthly income, they will ignore that. So it's one of the few exceptions where you have money coming to the home and it's not counted as household expense. It's typical of grandparents living them. Their Social Security money is for their expenses, whatever they're going to do, and that's not counted as household income. Income from children is another prime example. So you've got to be a little careful from this. If the children are working and putting that money into your checking account to pay the bills, it's going to count. If you're charging them rent. So here, let's say we don't have the $1,700 a month from family, but we're getting another $500 from rent from an adult child. That's going to count as income. But if you have a child living with you and their money isn't put into your checking account and they have their own expenses, they're a senior in high school, etc., that's fine. Now, children, disability, and state aid can get a little funny here. So when we talk about money for children, if you have a child that has a disability and the money goes to their needs, and the IRS has kind of taken both approaches on this. typically that can count as what's for the child. If you have a foster child in the home, that money is supposed to be used for the food, clothing, care of the foster child. Now, typically that's not counted as income, but a lot of it is going to depend on how it's going to be treated. Don't count it being one way or another. But I did have a situation where there were two adopted children, older couple adopted two children, and they both had severe disabilities. So the state was paying for their disabilities and also to help out this family that adopted these two children, bless their heart, that had some pretty severe disabilities. Because the money was to compensate and help the children out with their disabilities, the IRS did not count it. But if they have a pension, if they have money, and if it's kept aside separately for the child, they will typically ignore that. But if it's put in the general pot for the household, be very aware that very well might be counted and treated as income for the household. So really it is a huge difference here between and you'll get credit for them as a dependent if you're claiming them. But I do want to wrap up talking about assets in children's names as well. It's very typical for parents to put money into a 403B for college, or have an account for their kids and it's in their kid's name. If you have an account that's in your child's name and you're a cosigner, if you get your bank levies garnished and they take your child's income, you can almost always get that released by calling the IRS and showing, hey, this is truly their income, this is an account they've had, their money they've been saving. But and I have seen this where someone was using their child's account, in this case an adult child, instead of their own, and putting their money into the same pot. And the IRS said, well, no, not exactly here. Yes, you're sharing it with your child, but your money is going into the account. So they released what was clearly the child's money, but still levied what was the parents' money, because they were trying to use their child's bank account to get around and avoid bank levies. So this can get a little bit complicated. The more complicated it is, the more important it is to get good information. And tomorrow we're going to take an overall look at income compared to assets and expenses and kind of lay out, where does this tell you? How does this help you determine what you qualify for? And where should you go as far as a resolution? So again, I want to emphasize that if you have questions about this, there's almost always questions in most cases. Very few cases are just straightforward where there's no questions, no concerns. Give us a call, 520-485-7371. We are absolutely serious when we give out free advice all the time. And again, we don't use high pressure sales either. So if you have a serious situation and we can help you with that, we'll lay out your options, which is what we're going to be doing the rest of the week, is laying out your options, talking about them, talking about what's best for you and get in different situations. But for your particular situation, it makes sense to give us a call, get that free consultation, or go online to our website at guardiantaxlaw.com. You'll be able to see this show and other shows that we've done. So our whole goal is to create a library of information for taxpayers to access, get their questions answered. And if you ever have questions about your specific situation, don't hesitate to call. And we're here to help you out as we try to make your taxes easy. I joke around when I tell people that's the name of the show, they laugh. Like that, it's tough, it's never easy, but our goal is to make it easier so you can find that peace of mind and get that relief that you and your family deserve. So I hope you have a great start to your week, and we will see you tomorrow.